Hey guys, welcome back to the channel. I hope everyone is okay. I know the market's really rough right now, but you have to remember if you want like bigger rewards, you're gonna have to take bigger risk. So I understand that like some people are scared, and if you want to sit this out, that's fine too. But for those that are a little bit more adventurous, or maybe a little bit younger, or maybe they can afford to take a bigger hit, I'm gonna share three techniques that might be helpful if you want to go bottom fishing on Tesla and other high yield option ETFs like NVDY, triple QY, etc. So the market panics, and I mean I guess technically it's not a panic. It's more like a really bad correction. For example, Tesla already had their really bad correction back in their earnings release, and it wasn't so good. But these type of panics can create opportunities. But is Tesla at a bargain price? And how do we take advantage? My personal opinion, this is just my personal opinion. I think the markets might be overreacting a bit, but again, we won't know until, after the fact. So, at least for myself, I'm gonna put my money where my mouth is and say it's probably not that bad. But if it is, then well, I'm gonna have to just like deal with it. So the first technique I want to show you is the cash secured put. Uh, it might not be available on all stocks or ETFs, so I just want you guys to be aware of that. But for Tesla, it is. Their stock itself usually has pretty good trading volume, usually above 1 million shares. So, like I thought, like their options would be a little bit more liquid, but unfortunately, it's not. And uh, Tasty Trade, for some reason, doesn't allow me to sell cash secured puts on TSLY, but I'm able to do it on Thinkorswim. So you guys might want to like try this technique on with other brokerages. The beauty about this technique is that it allows you to name your own price up to a certain point. So for example, if I wanted to get Tesla at you know an even $10, based on like the bid and ask, I might be able to get filled at 25 cents. So this is nice in that it allows you to kind of set your own price. And then your cost base is basically your strike price minus whatever premium that you receive for selling this type of transaction. So, for example, at the $10 strike, if you get filled and it goes and the stock closes below $10, you will get filled, and you have to buy the stock at 10. But remember, you also receiving the uh, the premium from the cash secured put. So in this case, if I get filled at 25 cents, uh, my my cost basis would be 975. And remember, each cash secured put is for 100 shares, so 975 times 100 is $975. So that to me would be a really good price. But again, it all depends on whether you can get filled on the mid price or not. So the second technique I want to show you is for if for some reason you don't have access to, let's say, like your brokerage uh, doesn't allow you to do it, or maybe there's I don't know like some kind of permissioning that you have to do, or you have to fill out some paperwork to get it done. That's okay too. Most brokerages now like they'll let you just buy the stock directly at like almost no cost, aside from maybe like some regulatory fees. So usually for when that happens, I like to try to buy the stock directly instead of just messing around with even more options. So, for example, if you want to use like yesterday's close prices, like for example the high and low to estimate a range, and then you would use a limit order to place it somewhere in the bottom of the range. And it depends on how aggressive you are. So let's just use in this example. I know these prices are a little bit old, but this is just for an example. Like say the high of the day was 14.75 and the low is $14.19. The middle would be in at $14.47. So then you would set a limit order between 14.47 and 14.19. And then if you don't get filled, you can repeat this process every day until you get a price that you're happy with. And then I've also seen other people, they like to use, as long as it's below a moving average, then they just buy set a limit order, or some people even use a market order if they just are in a hurry and they just want to get the stock. You could try that as well. And then the last technique I want to share with you is what some traders call stink bids. So basically, you're placing a good to cancel order, usually a limit order at ridiculous prices, and you might need to be me, sorry, you might need to be patient, because it takes a while for these type of orders to get filled, and they may not even get filled at all. But you never know. Sometimes if there's like I mean, unfortunately, it's happening a lot lately. There's a lot of market panics, and people are just selling at like the first sign of trouble. So if you can see like at the near the bottom of the screenshot, I have a pending order for $9.99. Uh, and you never know. Like I might get filled, I might not. If I do, great. Then I'm lowering my average cost basis. If it's not, then that's fine. I'll probably have to create another order for like a higher price. So, either way, I'm okay uh, with it. So I just want to show you like some of my fills on TC Trade from the past week and some of the stuff that I've been able to pick up. Like I finally got filled on Coney because I've been meaning to try to get this up to like at least 100 shares. So now I have like another 10 at $18.19. And then the other day I got filled on triple QY. And the reason why I'm like these are at like 100 shares. Since I want triple QY to be like kind of like my backbone, like I want more shares, and I'm willing to like pay a little bit, uh, well, not pay a bit more, but like using like a larger share size because I want this to be one of like the regulars on my high yield options ETF portfolio. And then as you can see, I've been trying to like get 10 shares here and 10 shares there of like TSLY. And I think like over time, like this will this will work out well for me. Even though it's like right now, I think for a lot of people it's scary because like TSLY is at near 52-week lows, and a lot of people aren't comfortable like uh with this because it just feels bad. But I think maybe like 3 months or maybe 6 months or maybe like a year from now, like I'll probably be happy that I was able to accumulate Tesla at these relatively low prices. Of course, this is not a guarantee. Like it could go to like something crazy like $6 or $5, and if it does like I'll keep setting like new limit orders at like maybe like $1 increments. So like say for example my 9.99 uh, limit order gets filled, then the next step will be like maybe like 8.88, and then like further after that might be like $7.63 or something like that. Depends on what the prices are and like the ranges are. Because like I know like things look scary right now. I mean there's all kinds of like inflation and wars and this and that and bad earnings and blah blah blah. But I think in the long run, this will work out, and for both my sake and yours. If you're not comfortable, obviously just sit and wait, and you can just like watch my videos to see if this is right for you. I'm just this is my money, so I'm comfortable doing this. But if you're not, that's fine too. Hopefully, this video helps somebody out. And I like to keep like the distribution rates um, in the back of my mind. This is why I'm willing to take these larger risks because like there's a larger reward here. I mean, over 60% is, I mean, where are you gonna get that nowadays, right? So, if you like this type of videos, please consider giving it a like, and if you can subscribe and comment as well, that'd be really greatly appreciated. So have a great one, and I hope you make profitable trades out there. All right, bye now.